This is the podcast that takes a deeper dive into the alternative marketplace and explores topical issues. We're delighted today to be joined by Jeffrey Faustin, Managing Partner and CIO of Jenson Funding Partners, and also Kealan Doyle, CEO and Co-Founder of Symvan Capital.
If you think of private equity and venture capital funds, they tend to be 10-year funds with an extension to 12, potentially, right? So this whole thing about, I want to exit in 4 or 5 years, particularly for SEIS, it's not very realistic.
No.
But if you look at it, like what I always say to people is, don't look at this as a liquid asset, because it's not.
No.
It should be your best, to wealth managers, it should be the best performing part, but you've got to be patient, and it could be 7, it could be 8, it could be 9 years.
In terms of the exits you're seeing currently over the last, 4 or 5 years, is it mainly coming from M&A then, even though M&A activity has been super low, but is it more private equity coming in and buying up these companies, or bigger companies buying them versus the IPOs that we used to see?
For us specifically, we are seeing a decent balance between private equity and just acquisitions from actually fairly young companies raising funds and then doing a kind of an acquisition strategy of their own. So we've seen a lot of that. We're hoping to see one of our first Series B kind of clearing out the cap tables coming up soon this year. And then we've had a couple MBOs as well.
Cool. Yourself?
For us, it's very much trade, more than private equity.
Yeah.
Bit of private equity, but more trade.
More trade purchases, Interesting. And then I guess the other thing I picked up, you mentioned.
To hear more, please like and subscribe to Alternative Thinking from Growth Invest on YouTube, Spotify, and wherever you get your podcasts. This is a promotional podcast for EIS Platforms Limited Trading as Growth Invest. Any comments made or opinions expressed in this podcast should not be construed as investment advice or a financial promotion. Startups and early stage businesses are high-risk investments, and you are unlikely to be protected if something goes wrong. Don't invest unless you are prepared to lose all your money.